Friends, welcome to the 360 Experience podcast. I'm your host, Tim Braheem, and this is going to be an episode that very few others can match as far as I'm concerned with Craig Strent. Craig is the head of faculty for the Loan Atlas. He is a $2 billion loan originator with a B over the course of his career. He was the former owner, founder, CEO of Apex Home Loans, and he sold that company a couple of years ago. And he is just an absolutely wonderful teacher. And I think that you're going to see why I'm kind of gushing right now. I'm recording this intro, having just done the podcast episode, and I'm pretty blown away by the value that Craig brought. You will learn a lot in this episode about how to pursue alternative sources of referral business, how to mine your existing past client database, proper scripting in today's market, leadership, you name it, life balance. I mean, this is just buckle up. I mean, just buckle up and get ready to take a ton of notes. I do not recommend that you listen to this episode while you are in movement. This is one where you need to sit down and have your computer or your notepad ready, because there's just a lot to learn here from a wonderful teacher, a dear friend, and a colleague of mine in the Loan Atlas, Craig Strent. Before we get to the episode, I just want to remind you to please subscribe if you're not currently a subscriber. And if you like the episode, which I really think you likely will, go ahead and give us a like, forward it on to a friend. And without further ado, friends, the head of faculty of the Loan Atlas, dear friend of mine and multi-$100 million producer, Craig Strent, in the 360 Experience. So you're no longer the guinea pig. You know, the first time I had you on this show, I was in some crappy recording studio that I rented. And, you were my second episode. And now we actually have some professional equipment. You actually have an external microphone. Congratulations on that investment. And boy, bro, so happy to be here with you. Those of you who don't know Craig Strent, not only is he the head of faculty of the Loan Atlas, which is a very prominent position and a very influential position with all of our members, but also a very dear friend that I've known for over a decade now. Craig, thanks for being back here on the show, bro.
It's great to be here, and it's great to not be the guinea pig. I seem to be that a lot. I feel like I always seem to be going first into things.
Yeah, we put you in first position because we trust you. You should take that as a compliment.
Thanks, man. I do.
All right. So, I in the intro, I talked a little bit about your pedigree. I mean, over $2 billion in loans funded as an originator, founder and CEO of an incredibly successful mortgage company, Apex Home Loans, which you sold a couple of years ago, or a year and a half ago, I think it was. And you got your start in the subprime business. I actually think I want to start there. One of the themes that I've been uncovering with Shant Benazian and Ryan Grant and Sammy Rosenblatt, who you know very well, and myself, is, we all started in call centers, and it's been an interesting common denominator. And the result of that is really good at scripting, like really good at how we handle ourselves on the phone, how we counter objections, which I think is the bread and butter of being a successful originator. So I'm curious, we never talked about this before, but when you started in subprime, I know Shant started there too. That's a different sell. It's a tougher sell, right? Because you're dealing with people who are maybe a little less vanilla and have different needs, but it's also selling a much higher interest rate. And what I'd be curious about is, tell us a little bit about those early days as an originator and how that helped you become a successful originator, having to sell a little bit more challenging product.
Overcoming objections is just about getting at bats, right? Just like in baseball or anything else. Like the more you practice, the more you hear, the more you figure out what works, the more you go. I always improved my scripting, not like sitting quietly and thinking about it, but while I was actually speaking to someone, all of a sudden I would realize, wow, that was better, or I just thought of this. Here's something, and it's all about, it's all about getting the other person what they want. Like what is their end desired outcome, and how can I help them get there? And so that involves listening and really getting on their side of the table, which I've talked about a lot. And so starting out in subprime was incredibly helpful in doing that. And in subprime, you primarily sell payment, right? People are usually, almost always, it's usually some kind of cash out refinance to either consolidate debt or to do some improvements to the house that folks don't have the cash lying around to do. So you're not selling rate, which makes it easier because, being able to go right to advice versus price is helpful. Rate becomes a factor, but much, much less of a factor. So really, I liked it because it was much more relationship based. Like this transaction is not just about you getting a low rate and saving money. There's something that we can attach to it when you're doing a subprime loan, at least back then there was. And that's the monthly cash flow savings and what we're going to do with it. That's the home improvement project we're going to do. That's the money for college and so on. So I did what you did for many years. I only learned later that you had done it, and I laughed when I heard you say it. But I used to stay really late in the office and then walk over into the telemarketing room, and I would be the only loan officer or loan originator left in the office. And I would just sit there and I would take live leads. They would yell, "We got a hot one." And I would come flying in, and I found that to be super helpful. And it really allowed me to put deals in the pipeline early and be successful.
I had a bunch of originators that worked for me back in the day when I had my telemarketing operation. And I was the one who was always up there 5 days a week. Like I go up there, I'd eat a little early dinner and I'd go up there at 5 o'clock and I'd stay till 10. And all I would do is take direct transfers. And yeah, I lost a lot of deals, but it's in the loss of those deals that you learn. And I think that originators can get very complacent with their scripting and their way of selling themselves instead of being willing to try new things and say new things to see what works. I think you always have to be evolving, as an originator. I'm curious about something. We had a conversation. So just a little background for everybody. So within the Leadership 360 program, we used to do this thing. We haven't done it in a few years now, called Scriptapalooza. And it was a pretty fun event where, people would volunteer and we would put, 30 some odd objections into a fishbowl. And we would have kind of a NCAA tournament format and we would have gambling and people would be betting on each other, and it was super fun. And you come up we donate the money to charity, and you'd come in and you'd take you dig your hand in the fishbowl, pull out an objection, and right there on the spot with a microphone in front of everybody, you had to counter it and sell to that objection. And then we would have judges that would judge, a panel of judges that would judge, and it would be really fun. But you had told me about so you won. So a little bit of background for everybody. So Ryan Grant won twice, no huge shock. Josh Metal won once. Controversially, Holly Walter won one time. She had a very, very, very controversial, in my mind, scripting, but she won. And you won once, and I think you were in the finals 2 other times. So you were easily one of the best scripters, no question about it, in our amazing group of people. And you told me about a formula that you used that I thought was brilliant. Do you know what I'm talking about?
Yes. And in case he's listening, I'm undefeated against Ryan Grant in Scriptapalooza.
He'll be listening. I'll make sure he does now.
Okay. And this formula came to me while doing Scriptapalooza. It actually, I just realized it, and it helped improve my scripting even more. And so I think the answer to any objection you get is always, for me, it's always the same. Like I know where I want the conversation to go, and I know where I want to land. So the objection is really just a place from which I need to build a bridge to where I want to go. So for me, in every conversation with a prospect, somebody interested in borrowing money, taking out a new mortgage, I always wanted to move the conversation to using the mortgage to accelerate them meeting their financial planning goals, right? So I had a series of questions that I would ask that would take the conversation from price and rate and all that into those things, and then structuring the mortgage in a manner that complemented those things. And so that was just a bridge. So anytime you get an objection, all you really have to do, and you have to do it quickly and good, and you do it with practice, but you just build a bridge to the place that you want the conversation to go. And that's what I did regularly in Scriptapalooza.
So let's play with that for a minute. Are you ready, unscripted here, to do a quick little role play? I'll be consumer, and I'm going to give you an objection, and then let's have you build the bridge, and we'll engage, and you can role play with me. You good with that?
Always.
Okay. All right. So, Craig, I have been researching interest rates for the purposes of my purchase transaction. And you were referred to me by a financial planner, but I have a credit union as well. And that credit union is offering me an interest rate that is 0.25% lower than the one that you're quoting me. And I'm inclined to go with them unless you can match it.
Tim, I appreciate you bringing that concern to me. There's a couple things I want to talk about. The first thing I want to do is, of course, immediately address your concern and then ask you a few questions. One thing I want to call out initially is and I'm sure you know this, mortgage interest is generally tax deductible depending on your specific setup. So a quarter in rate is really not a quarter in rate. It's probably more like a 16th in rate. And based on the loan amount that we're talking about for you, that translates to roughly about $15 a month. In your tax bracket, it's probably more like $8 or $9 a month. And given where interest rates are right now, you're probably going to have this mortgage less than 3 years because of how I'm going to manage it for you and proactively alert you to savings. So we're really not talking about a lot of money here. We're talking about maybe a few $100 difference, of which I could easily give you credit. We could come back to that. So I want to make sure that you get a great deal. And so I hope I've addressed that directly for you. At this point, with your permission, I'd like to ask you a few questions, though, about the mortgage you're seeking and the ideal outcome so we can make sure that this mortgage really complements your overall financial planning goal, which is really why your advisor referred you to me. It would be okay if I ask you a couple questions?
Absolutely.
Great. Thanks, Tim. First of all, are you currently maxing out your employer-sponsored 401k?
Not consistently, no.
Okay, we'll come back to that. I know from just us talking, you've got a couple kids, you're married. I know both you and your spouse are working, and you've got a little ways to go before retirement, just been getting the debrief from your advisor. Do you currently have all the adequate life insurance and disability insurance policies in place to protect you and your family for the next 20 or 30 years until you retire?
I don't really like life insurance, Craig. I think it's a waste of money. I don't really see the benefit in paying it. I expect to live quite a bit longer, and it just seems like a waste.
Okay. Just looking at your application here, are you aware that both your salary and your wife's salary are needed in order to pay the current mortgage you have? And based on the bank statements you gave me, you've got less than 6 months of cash reserve. So God forbid something should happen to you. It would probably result in your family having to sell their home, sell your marital home.
I've never thought of that before. It's not a very fun thing to think about, but I guess you bring up a good point.
Yeah. So let's talk about that more. And by the way, nobody likes life insurance, including me, right? I mean, it's the one thing we pay for, and we know that we personally will never get the benefit, right? So yeah. Nobody really likes that. And then finally, Tim, with regard to your two kids, do you expect that they're going to go to college at some point?
For sure. Yeah. Well, at least I hope so.
Great. I looked at some of the statements you gave me, but I didn't see anything for a 529, a college funding plan. Have you started one of those?
No, we have not. I haven't had the additional resources to feel comfortable putting that money into that account.
Totally makes sense. I'm sure you're aware that the sooner you pay for college, the cheaper it is. So we'll talk about that a little bit as well. So Tim, from here, I would want to sort of explore some of these other places that you're not meeting your financial planning needs. And so we can stop here if you want, but I could keep going into those things. And what I could say is, one of the things we're going to look at here is you saving money on your mortgage. At the current terms that you and I are talking about, it's about $350 a month. Now, I can go back to your advisor and we could figure out where best to put that money. But I'm guessing that we could put you in a position where you can max out your employer-sponsored 401k plan with this additional funds, which will create this much additional wealth for you now. Now, if I run that all the way out at 8% a year, which is S&P average return from going back 100 years, This means you could potentially retire sooner, retire with more money, and so on. Your advisor might recommend that we use this to fund a disability insurance policy in case, God forbid, something happens to you or your wife that doesn't result in death. We want to make sure that you can be taken care of and continue to live in your marital home and pay your mortgage and so on. So what I would do, Tim, is I would basically turn the conversation into how the mortgage could help the rest of the financial plan. And then, and that's where most people who want to work with financial advisors, that's where they stop. The next piece of that further is then tying that money into something, giving it an emotional attachment. That extra $350 a month is going to be an extra $330,000 over the next 27 years, which will allow you to retire 2 years earlier or with more money or buy a better retirement home. You've got to tie it to something that's personal. And you can do that with all the different things, the insurance, the college planning, the 401k, so on and so forth.
Do you go deeper with the subject matter of the college planning out of curiosity? Like what colleges are you earmarking for your kids? Is it a state school? Is it a...
Absolutely. And I just stopped there because we were going for a while, but I would absolutely say, what is your plan to pay for college? And many people will tell me that their plan is to pay off their mortgage. Sometimes they even have a 15-year fixed and then borrow against their home equity in retirement to pay for college, which is, sort of the opposite way of what you should be doing because you're not getting the value of the time, of the velocity of money. You're not getting that value, that benefit of dollar cost averaging and the velocity of money if you do that. So I would and I never, ever, ever want to make someone feel bad. I probably did that a tiny bit with you on the insurance side, but I would never want to make anybody feel bad or stupid or uncomfortable. I want them to know that I'm trying to help solve for a financial need for their family.
So what strikes me in hearing you go to these places is that the average originator, 99.5% probably, if not more, don't ever go to any of these areas of exploration with the client. And I think that the reason that they don't is because they don't feel confident and comfortable enough in their knowledge to be able to have an intelligent conversation, which has a whole myriad of different side effects. I mean, if you are not willing to go to a certain place that would bring value to the client, of course, you're displaying an insecurity in yourself, which, as you've heard me say a million times, I mean, the only relationship you're ever really having is the one with yourself. So you got to work on your own internal confidence and belief system in terms of the value that you bring. But how did you equip yourself with this knowledge to where, clearly somebody listening right now is like, wow, that's a whole different level of mortgage planning. We'll talk about mortgage planning here in a moment, but it didn't come from nowhere. I mean, what wisdom would you have to share in terms of how people can become more skilled and more knowledgeable in these areas to where they have the confidence to broach the subject with a client?
A couple things. The first thing I want to say is educating yourself and investing in yourself. My longtime amazing friend and business partner, Eric Gates, used to say at our sales talks that as originators, we make doctor, lawyer money. We do. In fact, really good originators probably make more than most doctors and lawyers. Well, lawyers go to school for an additional 3 years after college, and doctors, I don't even know how many it is. I think it's 9 or 10, right? So how is it to say that we're not getting educated in our craft ourselves? So for me, that was, there are some designations for mortgage people out there that help with the financial planning side. Certainly recommend those. There's a couple of them that are excellent.
CMPS being one of them that you recommend, correct?
CMPS and CMA, both excellent, very different reasons. They're both excellent, different coursework and knowledge base. Definitely recommend both of those. And then education. I mean, I, for many, many years, read Mortgage Originator magazine cover to cover, Scotsman Guide, all the industry trades, all the time. Whatever I can get my hands on, Journal of Financial Planning, the Wall Street Journal, right? Just getting myself educated and talking to advisors. Just if you just sit down with advisors and you talk to them and you ask them, what are people's most common needs? What are the biggest mistakes you see people making, right? And how do you solve for them? Just having those conversations with your financial advisor or others that you meet at the chamber or wherever will help you get educated. So if you're not comfortable, if you're not confident, get educated on it, because as anybody who's heard me speak before has heard me say that once you demonstrate competence, competence, once you demonstrate competence, the prospect, the referral prospect, the potential borrower, whoever it is, will feel confident in working with you. So you have to first work on your competence, your professionalism, and your knowledge base, and then others will be very confident in doing their mortgage with you and the decision they make to do so.
I'm really glad that you brought up the subject matter of seeking to obtain that education from financial advisors. So let's unpack that a little further. One of the things that I used to do, I don't believe we ever talked about this, but when I wanted to learn how to refer business to CPAs, I went to the two CPAs that I was in partnership with, and I used the easiest script that you'll ever have, which is the truth. And I said, hey, listen, I want to be able to seek to uncover opportunities for you. But what I realize is that I need to be knowledgeable about what I'm looking at when I'm looking at a set of tax returns to find flaws in the existing tax strategy that the current CPA is not fulfilling. So what are the things that you look for? Like if I were to refer a client to you right now and they were to be considering utilizing your services rather than the existing CPA services that they have, what would be the things that you would be looking at in their tax returns? And what are the common things that you see that are mistakes? Teach me what to look for on your behalf. Now, this is an incredibly flattering conversation, first of all, to the CPA, because you're sending a message to them or the financial advisor that you're going to be looking to make referrals to them. But secondarily, they're going to be very willing to teach you what are the common mistakes that they see made in their profession, which will then arm you and equip you with the wisdom and knowledge that you're looking for. Is there anything you'd like to comment on relating to that?
No, I think that it just works, and when you asked me how I was doing it, educating like that sort of just came into my head. I realized that I was asking advisors all the time what they're seeing in their practice. I would be careful about dangling referrals back to potential referral partners in exchange for business, because that's a trap, and it can get a little dicey. And the reason that advisors would refer you people is not necessarily that you would refer back one at a time, incidentally. There's a lot of other reasons we could talk about. And of course, you're always going to make a great attempt to refer them back. But I got to the point where I had so many advisors I was working with, I certainly couldn't make that promise at all.
Yeah, great point. Great point. I was only working with two CPAs, so it wasn't that difficult for me to throw them 2, 3, 4 bones a year. And I got them a lot of at bats, like I would just simply ask the question, say, I'm noticing a couple of things here in your tax returns that kind of a little bit of a head scratcher for me. I'm not a CPA, but I know enough to be dangerous. And I'm wondering if you would be open to a second opinion. One of the things that my CPA partner does for me is he's willing to not charge you to review your tax returns and to make suggestions as to how you can improve upon your existing tax strategy. Would you be open to me introducing you to Richard Blythe, as an example, as one of my CPAs, and having him review your tax returns? And it's a simple question. People either say yes or no. Oftentimes they'd say yes. He'd then review their tax returns. I'd shoot them over, or I'd introduce them and get permission to shoot them over. And then he could take it from there. But I would get him at bats, and he would oftentimes get a new client as a result of it. So you did a lot of business as an originator with financial advisors and divorce attorneys, or what you refer to as alternative sources of referral business. And this is a can of worms that I'm about to open. And I'm comfortable with you going as deep into this can of worms as you'd like to, because I think there's a lot for people to learn here. What is the benefit of working with alternative sources of referral business, such as CPAs, CFPs, and divorce attorneys? And how does that strategy differ? And what are some suggestions that you would make as to how to cultivate those relationships?
Non-Realtor referral partners is what I'll call it. And that's no knock on realtors. They're a valuable partner. It wasn't my strategy, because I believe that to be a red ocean, right? Where there's just a million loan officers and they're all going after the same people. So I've always felt strongly about being where other loan originators are not, and making myself very valuable in those spaces. I found that financial advisors are by far the best source of business out there and the most fun to work with, way more fun. It's not just about, you need to be, I would say you need to be. I was deliberate about my business. I didn't wait for the phone to ring and just do whatever deal came. I went seeking the type of referral partners and the type of transactions that I wanted. I was deliberate about it. And I did that through teaching and targeting and meeting and all of those types of things. And so, and I think that deliberation, by the way, also applies to the people that you work with, your clients that you choose to work with, the people on your team, the company you're at, all of these things are very deliberate in the approach. And so, for me, I found that the other referral partners that were not realtors needed me more than the realtors did. And I could help them more than I could help potentially the agents. And that's because, you need to be looking at the liability side of the balance sheet to be an effective financial planner. So many of them say on their website, take a comprehensive approach. We have a holistic process, blah, blah, blah. But if you ask, what do you do about the mortgage and the liabilities? How do you manage that? No answer. If you ask, how do you manage the home equity, which is frequently the largest asset somebody has? No answer, right? So for me, I felt like I could really help those people a lot and help them develop new sources of business, new cash flows to invest, and which is what they want. Divorce lawyers are just that. They know the law. Financial advisors are at least, money people. Divorce lawyers, they don't know mortgage at all. And you probably figured this out already, but most divorces involve a marital home. Almost all, not all, but a lot, maybe they don't own, but home ownership rate's pretty high in this country. Marriages usually don't get divorced. Usually people buy a house before they get divorced. Not always, but frequently. And so they don't know what to do. And if you can insert yourself into the relationship and the transaction and say, look, when Jim and Jane are getting divorced and you have a question, just call me. Don't tell them to go to their banker and go find a mortgage person and come back for another appointment. Just call me right there. Call me from the meeting. Call me right afterwards. Whatever it is, you want me to be available, I'll be available. So it's massive value. And they write these, as you've probably seen, Tim, they write these hundreds of pages agreements, property separation agreements, divorce agreements, without knowing that nobody can refinance or get another place until the alimony and child support is seasoned 6 months, right? And there's got to be a documentation, and nobody realizes it's got to continue for this many years, and how to do a refinance where the money going to buy out the equity is not considered cash out, right? These are just little easy things that are massively valuable to this community. And the minute you demonstrate to them your competence in this area, they will then become very confident in referring these people to you. So I don't believe just that I had, great numbers like a lot of other originators. I believe I had a healthier business and a much more fulfilling and happy way of doing mortgages because of the types of referral partners I was working with and the manner in which they were referring people to me.
Well, there's some differences too that I know that you've highlighted in previous discussions that we've had about real estate agents and their neediness, let's say, versus financial advisors and their lack thereof. Talk to us about that.
Well, the most obvious thing I could say is that financial advisors don't work weekends, and they typically don't work evenings, period. So you're not getting, maybe they refer someone that needs you on a weekend, but not, you're not getting that harried, crazy call all the time where they're calling three loan officers, and the first one to call them back gets the deal or whatever. It's not like that. It's just not like that. And, the financial advisors, they don't give out three names. They don't have three names. They haven't met three good mortgage people. They give out one name, yours. And finally, people pay their financial advisor for advice. And now this was true. I used to be able to say this a long time. They don't pay their realtor for their services. That just changed. So we'll see how that impacts this. But basically, if you're paying your financial advisor typically 1% of your assets under management, which could be thousands of dollars a year, there's a tendency to follow their advice. So if they say, call this person, they'll treat you right, they'll do a good job, then you're going to follow their advice. So those are three major differences between advisors and realtors and how they work.
Well, I've always felt like, follow the money. You've heard the term, and I think it applies here. So it's important to understand how people are paid because it will have a direct impact on how they perform and what their hot buttons will be. So when you look at a real estate agent, they get paid a lot of money up front one time. And then if they're lucky, that person will come back again and buy another home from them, but it'll probably be several years before that occurs. However, with a financial advisor or a CPA, they kind of have more of an annuity-based income structure. So, their pay will remain consistent on an annualized basis so long as they manage that relationship and bring value to it on a go-forward basis. So that's a very noteworthy thing because they're going to care a lot more about how you make them look than a real estate agent will, because their income, their annuity income, is tied to the referral that they make. So it's important to understand this going in because you want to be sensitive to that. You want to display that confidence that you're talking about so they have the confidence. And it may take a little bit longer to earn that confidence just because they don't want to put their good name on the line for somebody who they don't have complete, total trust in. However, there's another topic that relating to financial advisors that I want to make sure that you explain that I think is really important, which is financial advisors have exposure to lose their clients to some of the larger lending institutions if they offer those similar services. So talk about how you position that. Maybe you can give us a little scripting on that to continue with your scriptapalooza here. So how would you share within a financial advisor the importance of them working with an independent mortgage professional like yourself?
Well, first of all, no cross-selling. I don't offer financial advisory services, and therefore it's not going to be an issue. Whereas if you tell your client to just call their previous lender or call their big bank, a lot of these banks, the mortgage lender is incentivized for cross-selling to their colleagues down in the financial planning department, particularly at banks, more so than anywhere else. So that could be a problem. Right. And so it's important to have someone on your team that's going to keep you in the loop, work with you closely to make sure the mortgage is properly structured into the plan, and be watching out for the clients. And at the same time, trying to figure out new cash flows for you to invest and figure out how to make sure money doesn't leave the portfolio. So that's one of my standard bullet points in talking to advisors is that there's no worry of cross-selling. And that's not a huge worry for them. If they're doing a good job, somebody's not going to leave them because somebody's always trying to steal the client. But it's important.
There used to be a relationship that I had with one of the top Northwestern Mutual life insurance agents in the country. His name was Todd Gindy. And I don't know if you ever saw him. He spoke at one of my Loan Toolbox events many years ago. He was a great speaker. And we had cultivated a great business relationship. And it was founded on, and he gets all the credit. It was my idea, but he gets all the credit for implementation. So we're sitting one day in my office and I said to him, let me understand a lot more about your sell. Like, how do you present yourself? And I happen to think that he had the toughest sell in the world because to your point earlier, he's selling death, which is a topic that nobody wants to talk about. And the benefit of that policy is something that the person that you're selling to will never see. And I asked him, I said, what do you come up against as the common objections when you're trying to sell a whole or term life insurance policy to a client? And he's like, people just don't want to allocate money that they would, otherwise be just dropping into their savings account or buying another toy with to something that they don't even really want to think about. So we devised a strategy that he then implemented. And literally, Todd was good for 20 referrals a year to me. I mean, it was crazy what a good referral partner was. And the strategy was for him to present to the client his life insurance offerings, but simultaneous to that, to analyze their existing debt load and for me to continually give him an update on where interest rates are at. So if he asks the client, let's talk about your existing mortgage structure. Okay, you have a $500,000 loan and your interest rate is 7%. Oh, wow. Well, I have a partnership with a guy named Tim Braheem, who is a terrific loan originator, and I stay in close communication with him. And right now, I don't know if you're aware of this, but interest rates are at 6.125%. I would like Tim to run some numbers to see how much money we could save you on a monthly basis so we can pay for this insurance policy with the money that he will save you. And that partnership worked incredibly well because he kept feeding me refinances for debt consolidation and or just a simple rate term refi that would save the person money. And then he would use that savings to then pay for their life insurance policy. So this is another example of working in partnership with a non-referral or non-realtor referral partner in kind of a unique way. Anything you'd like to comment on before we go further?
Yeah, I mean, I'm very much fluent in that situation. I did it many times. You could do it with a lump sum amount as well for certain types of policies. The advisor would often show them the term and realize that, and the folks would see the VUL or the whole life and realize they want that and they can't afford it. And then they would offer a solution. So absolutely a winning partnership. I would not forget about disability insurance because disability is actually a lot more likely in younger age than death. So I think people really miss that one as part of a financial planning need, particularly young families when they're not thinking about financial planning. So I think it's a natural fit to have a partner there. Northwestern, that's really what they do a lot of. And so in addition to financial advisor, life insurance, CPA, all of that, I do want to comment real quick. CPAs are not, we've talked about this before, are not, in my mind, the same as financial advisors or life insurance people. Life insurance people, financial advisors, those are all salespeople generally. CPAs are really not. They're technicians. And they're even more scarce about giving referrals because of their recurring revenue model and what they think might happen. So there's, in my mind, it's a different approach with them. And I've got successful approaches with them. Some things I could share, but it's a different approach than financial advisors. And I say that because so many times I've heard industry leaders lump those two categories of professionals together, and they're really quite different.
Share some of your suggestions as it relates to CPAs.
Yeah, I mean, CPAs, they like to be a little bit surprised and delighted because they don't do that in their practices. They're generally not their personality. I found something that was very effective was sending a copy of the settlement statement, back then the HUD one, right now the CD, right? Sending that in a very timely way to the customer as well as the CPA. Post-close with a letter to the CPA would be very effective. You could also send it around January 15th directly, even by email to the CPA and copy it to the customer, but really putting timely information in front of them. I'm not a fan have ever been a fan of rate sheets, but the one place I find rate sheets can be very effective is with CPAs during tax season, right? They're talking to clients. They want to have information. And so that's the one time where I find it could be helpful. And then anytime you can call out something technical to them, they really love that. So like if a tax law changes that affects tax deductibility of mortgage interest or capital gains or how things are done in an IRS tax-free exchange or rental properties, anything that you could call out that's technical to them, not only are they going to probably know it, they're going to up-level the conversation immediately. They get all geeked out over technical things. So those are the approaches you should take with them. Don't schmooze them. Stay technical. Put good stuff in front of them that they can talk about.
Where did you get the idea of sending the HUD one and what was the other thing you mentioned? Oh, and putting rate sheets in front of CPAs. Do you remember?
You're probably going to say that I got it from my loan toolbox days or something like that. And it's very possible that I did. And then of course, as I often do with your stuff, just taking it and making it better.
Well, first of all, you're damn right. You got it from me. That's exactly how I got Richard Blythe, who is the CPA that was the most valuable to me. I mean, he was good for about 25 referrals a year. And it was just as simple as what you just articulated. And I want to make sure that everybody understands this is one of the easiest things you could ever implement is to just write a written cover letter that you send out on every deal. You have the CPA's information on their tax return. And at the close of every transaction, you send the final closing statement along with that cover letter. And the CPA, Richard Blythe, picked up the phone. He called me and he said, I'd like to talk with you because I've never had a lender do this before. And I'd like to get together with you for lunch. I was like, okay, let's go. And yes, 1,000,000% yes, putting rate sheets in front of CPAs starting at the end of January and all the way through basically now, because half the people are on extension. I would just be putting a rate sheet once a week in front of a CPA that you're wanting to cultivate a relationship with for most of the year. Because to your point, if they're a good CPA, not a tax planner, but like a good, true CPA that is there to advise their clients on a holistic basis, they are going to want to be informed. They want to make sure that they don't look stupid. A good CPA is going to look at the person's existing interest statement. They're going to calculate what their current interest rate is. And then they're going to be able to look at a rate sheet and go, well, I can help my client save money, which cements the relationship long-term, which is that annuity income piece that I was referring to earlier. So let's talk about mortgages under management, which is your term that I know that you love to speak about. You have a famous saying about the difference between purchase and refis that I love, and I'm going to let you articulate that in a minute. And then I want you to go deep on talking about the value of managing debt.
Okay. Just to close out the CPA thing real quick, Tim, the script I would just give to people right here is, hey, Tim, as part of this transaction, you've got a new mortgage. Anytime you do, it's important that your CPA has the info. Usually the banks mail you all the stuff for taxes at the end of the year, but it's always people scrounging around for their mortgage stuff that the CPA needs. With your permission, if you'd like to give me the information for your CPA, I'd be happy to send it along to him now, so him or her now, so that he has it. People will love that, and they always say, oh my God, thank you. That would be great. So I just want to make sure people got that as well. Okay. What I say, and this just came to me over time, I don't know why it popped in my head at some point, but I used to get a lot of heat for, being a little bit of a refi whore, for lack of a better term. And what I finally started saying to defend myself to people was that purchases pay the bills and you retire on refis. And I believe that to be true. I believe it's important to focus on your purchases, and in markets that are not as vibrant, making sure you've got good deal flow. But for me, those purchases are all being done so that I can properly manage the mortgage. We'll talk about that. Keep an eye on them, proactively notify people when they're savings, and just clean up in refi times. To me, that's the candy money, right? That's where you really do well. And so I came up with that saying, and I still to this day, particularly right now in this environment, really believe it to be true.
So let's start with how you position with a client at point of sale that you're going to manage their debt for them. And then from there, let's talk about the process that you execute to fulfill that commitment, because that's the tricky thing, right? Like a lot of originators make these false promises and they don't follow through with them. But I know that you are not one of those originators, and that's why you were so successful. And by the way, how many years did you do over 100 million in production?
I don't know. I'd have to go back and look. A bunch. And, I was the CEO of the company as well that was growing and expanding. So some years I was really focused on origination, and other years I was more focused on growing the company and my loan originator. So it sort of varied, but at least half a dozen.
Okay. So go ahead and begin. How do you position it at point of sale? If you want to role play, we can. I mean, it's fine.
No. I mean, I explain to people the system that I have. It's the same as like explaining to someone that you have a perfect loan process, right? And then showing it to them. Same thing. I actually showed people what my mortgages under management system looked like. And I would walk them through each stage of it. And I would let them know that they're done worrying about mortgages. They don't have to ever worry about them again now that they've got me. Or as Caleb LeGrand would say, you've got a friend in the mortgage business. Same principle here. I would tell them, I am going to, this is not a transaction for me. It's a relationship. I'm going to help you get the desired outcome you want on this mortgage. And then I'm going to proactively manage this mortgage for the entire lifetime of you owning the home. And what that means is you're going to receive regular updates from me in writing, comparing your mortgage to where the market is. We're going to pre-establish a target that if that target should ever hit, you're going to be proactively notified, and we're going to save you money on your mortgage. We're going to be touching base annually or biannually if you prefer. And at that time, we're going to take a look at a free credit report. We're going to review your home equity. We're going to talk about your financial planning and other things. You've got me now for the entire time. Or as Ryan would say, which is a great line, to help you be a successful homeowner. That's what I'm here to do. As he might also add, which I swiped years later, that most mortgage people are just here to serve you for 30 days. We're here to serve you for 30 years. And it's the truth. Now, you could say that all day long, but you must have a system to actually demonstrate you do it. And I did. And my system was the upfront total cost analysis, going very deep, bringing in the CPA financial advisor as needed, all the mortgage planning and financial planning implications. Then doing the drip system where I actually mailed physical reports, which is the most effective thing you can do for many, many years. And then setting those proactive targets and doing the regular check-ins and reviews. And it was incredibly effective. And I had a huge retention rate. I forget what it was and all that, but during the refi years, I would retain a massive amount of my database, even when they were getting solicited by their servicers and the trigger leads and all that stuff, because people wanted what I was doing for them.
So you would send them an updated cost analysis comparing the existing market conditions to their current loan via mail. How frequently? Every quarter. And it wasn't a TCA. It was actually a different software that was more basic, but just showed them, here's where rates are now. Here's what you've got. And here's the savings if you did any one of these three options. It was very, very useful. And you could look at it, and I would also write notes on it, circle it. Tim, you're good, right? And I've said this, before, that when it comes to this environment, the more times you could tell people there's no transaction to be done, there's no need to refinance, you're good. The more times you can do that, every opportunity you get, do that. Because if and when it ever becomes time, there's no discussion. You have instant credibility because they know that you're not being biased and just trying to get a transaction. They know that you're watching out for them, and you've told them all along, not yet, not yet, not yet. Hup, just happened. Let's go. Now they're ready to move. Recently, we did that. I want to ask a question in a moment, so I don't forget. I'll verbalize it now, and then I'll go off on a little bit of a tangent. The question will be, like, if you have 1,000 people in your database and once a quarter you're sending them an update. I mean, who's executing on, completing that updated, analysis of, 3 or 4 different loan structures or whatever it is, comparing their current loan. But recently you and I, so I mentioned this in the intro, but we haven't talked about it here. You're the head of faculty for the Loan Atlas. And that was one of the smartest decisions that I ever made, was making you head of faculty for sure. You're doing a phenomenal job with it. And we recently had a coffee talk in the Loan Atlas with me and you and Eric Bible and Holly Walter. And one of the things that you and I were kind of ping-ponging back and forth on that I want you to speak to, that kind of plays off of, you're good, you're good, you're good, you're good. Now you're not good, let's move. And the credibility that you have is also the importance of when somebody does not take advantage of the opportunity to refinance their loan when there is an opportunity, how incumbent it is upon you to make sure that they know what they missed out on. Speak to that.
Yeah, the takeaway, right? It's incredibly effective. Hey, Tim, remember we had that target set for 5.5%, and I gave you a call last week, and you really, I understood and I respect you. You wanted to wait till 5.25. You want to really get that payment down to 300 versus, 265, right? I just wanted to give you an update, let you know we're back to 5.75 now. So that 5.5 is no longer there. And I just want to sort of reset here and determine, would you like me to alert you again at 5.5? Or should we reset your target down to 5.25? Which is it, right? And the reason you do that is because people always want what they can't have. That's it. They want what they can't have. So if you offered something and it's no longer available and they haven't acted, I think it's a very effective sales tactic to let them know that offer is no longer available, right? And then this way, the next time it happens, they may jump. And if you do it in a professional manner, no problem at all. If you do it in a sort of, you could do it wrong and offend them. But I think it's just a matter of, simply how I just said, and ask them if they want to reset it. And if they don't, that's okay. But everybody should have a target in which they're ready to move forward, even if that target is an unreasonable number. And I thought there were unreasonable targets. And then March of 2020 happened. So there is no such thing.
Let's go one step further with that. I'll add, so I used to do that very effectively. You get to, basically what you're describing here is you want to seize the opportunity in the sales process to create pain. If somebody was greedy and they were seeking the 5.25 and they didn't move at 5.5, and now it's up to 5.75, most loan originators don't do anything with that. And that's a big miss. You need to call the person and not only remind them, as you just articulated, but remind them of how much money it is that they're not now saving. So I know you were seeking to save $300 a month, and at 5.5, it was only 260. My challenge as a debt manager and somebody who cares about you and your long-term financial picture is that now every month that goes by, you're paying $260 more than you should be paying. I don't know how long that will last for, hopefully not too long. But what I don't want to do is miss the window of opportunity when it becomes available again in the future. And then you reset the rate, because what you're doing there is you're creating pain for them. You're reminding them that you kind of blew it here. You got greedy and you blew it, but you're not saying it that way. And it humbles them and softens them up to being open to taking that 5.5 when it comes back. Okay, so the creation of those analyses that you would send out once a quarter, who would do those and how long do they take?
CRM generated and marketing intern. So it was really a question of just hitting a few buttons to segment the database that was going to receive at that time. The real work was printing them, stuffing the envelopes and sending them. I later outsourced that to a direct mail company, but you can do it by email, and it's effective, not as effective, but you can do it as well by email. And some of the CRM services will offer outsourced ways to do it as well. But it was a decent amount of work, but it worked because it had a sticker that said, Rate Watch report is enclosed. And I put a live stamp on it. And I wrote notes inside the envelope. So people would open it and they would see, oh my God, Craig says I'm good. I mean, I used to go home every month with like a stack like this that my marketing interns would give me. And I would sit there at night with the TV on and I would just review them real quick. And I would write notes, and I would clean the database up and all that. Now that probably makes me old school, and some of the young folks on this call probably thinking that's crazy. What I would offer to folks that are really good with technology, do it by video. There are now AI generative video services that I understand you can deliver the same message, and then just the name will be different. Like I could record it once, and then when I send it out, it will say Tim or Joe or Bob or Jane or whatever. And so I could just record a couple of messages. It's time to refinance. It's not time to refinance. Hope you're great. And it'll insert the name into my voice, right? Like that would be incredibly effective, in my opinion, if you could send out a video every quarter to someone with an update on their mortgage.
Yeah, I don't want to lose sight of the fact, though, that I personally have a strong opinion that direct mail is even more powerful now than it was back when you and I were originating loans at a high level, because I don't know about you, but my mailbox is rarely full. I just don't get anywhere near as much in the way of solicitations as I used to. So when something ends up in my mailbox, it's almost like, oh, I wonder what this is. Like I'm curious, right? Because it's just not that frequent. And guys like Jay Dacey, who is also on the faculty of Loan Atlas and a great originator who you and I both know. I mean, that guy's been doing a monthly one-page newsletter snail mail to his database for years, and he crushes. I mean, his database, he owns his database. I mean, it's an intimate relationship with them because they read the stuff that he sends because of the delivery mechanism that he provides. Tell us about the intern thing for a second, because that's interesting, right? Like this is good business practice. Yeah. Where would you get your intern and how much would you pay them?
And handwritten note cards, Tim, right? I mean, if you get a handwritten note card in the mail now, it is literally the first thing you open every single time, right? You cannot go wrong with a handwritten note card to a past client or referral partner. So if you're not doing, if you're really busy and your book is really what you want it to be, then you should be doing minimally 2 a day. If that's not the case, you should be doing 10 a day, in my mind, for all sorts of occasions. I hired my interns from my alma mater, the American University, great school. And I used to just go to the career center there, and I had a recurring opening, and I would frequently ask the current intern to go and find the next one. And they almost always had a friend who was also a marketing major and did that. And if they wanted me to give them credit for it for school and fill out all the forms, I would do that too. Typically paid, minimum wage or maybe 10 to 20% above that at the most. And it was maybe 15 or so hours a week, 10 to 15 hours a week. And they loved it, because they were in the office, they participated in our fun stuff, they had lunch with us, they went on our company events. We made them part of the group. They had wonderful experiences. And what I did was I had the first intern basically write down everything they did in a manual. And then for the next 15 years, the interns would just update and change the manual, take new photos, all that. So by the time I sold the company, I had a really strong manual of all the things that the marketing intern did. And it had been changed and edited many times over the years. And so we would just hand it to the next intern and say, okay, please run these reports. If you don't know how, look in the manual.
Absolutely love that. for anybody that's listening going, wow, this is sounding like a lot of work. It's like, well, yeah, I mean, it's a lot of work. So you get paid a lot of money. I mean, unless you hate money, then I would suggest you do the work because
there's a reason it's called work, right?
Correct. I mean, this is where the money is made, is being, I want to make sure everybody is really taking note of the fact that what we're talking about is strategy, like really important business strategy here. I mean, that's what separates the men from the boys, the women from the girls, so to speak. I mean, it's the difference maker is deploying some strategic thinking about how you're going to get this done at a fraction of the cost, and how you're going to focus on the right things that will ultimately move the needle and grow your practice.
And scaling, right? I mean, the most originators struggle with replicating themselves, and they wind up doing a lot of tasks that they, may not want to pay somebody else to do. And so this is just scaling, and it's pretty obvious. You start out with one intern, and before you know it, you got 5.
Right. Totally. So as head of faculty of the Loan Atlas, you're pretty tapped in right now to what originators are going through. We do 7 live calls a month, and you're on most of those. What are you learning about the current environment in terms of what originators need right now? And what wisdom do you have to share with those that are listening about the things that you should be focused on right now as an originator in today's current market? You
should be focused on working with what you have, right? Do what you can with what you have where you are. It's a famous saying, right? You should be working with what you have right now. Don't be thinking about, oh man, the market's this, the market, none of that matters. Be present in what the opportunities are now. And the opportunities are enormous. It's an incredible time to be gaining market share. And it's an incredible time to have fun. You're not just sitting at the desk as a phone jockey taking deals in, which is fun when that happens, but getting out there, getting physical, meeting people in person, doing things with potential referral partners that they love doing, and creating great experiences and memories with those folks. Developing relationships is the most fun part of the business in my mind, and helping the homeowner. So now you have time right now to go deeper with your customers, to go deeper with your referral partners, to get out there and away from your desk more. And if you do those things, they're going to pay huge dividends. There doesn't need to be fear in the market right now. I recognize it's hard, right? If you're not closing the deal flow you had and you have expenses and all, I get it. What I could promise you is if you just keep walking forward, this is a cyclical business. You're going to have another great cycle. And that cycle will be even greater if you make the strong relationships now and you prepare yourself for future markets. And even in those crazy refi markets, you should be preparing for the markets after that. So be in the present, but always be looking forward as well and prepping for what the next step looks like, and preparing you and your team and your processes and your clients and all of that. Have fun with it. It can be a really fun business.
Such a important answer that you just gave, because what you don't know is earlier this morning, I had a Zoom call with 3 people that you know quite well, Katrinka Condi, Greg Kingsbury, and Mike Watson. And for everyone else's benefit, those are 3 terrific originators. And the common denominator of those 3 terrific originators is that they have relationships. They have a very intentional approach to developing connection. And the purpose of the call was to prep them for a panel discussion that we're going to be doing in Savannah at the Masters Retreat in October. And one of the things that was really interesting was to talk with both Mike and Greg, who, for everyone else's point of reference, have a tremendous base of referral partners. And the one thing that was the common denominator of those 2 guys was that they are very intentional and understanding of the fact that where their time needs to be focused is on the relationships that they currently have that they could enjoy engaging in on a consistent basis. So they both freely recognize not every real estate agent that they work with is their tribe, we'll say, or someone who they have a lot in common with. So they don't, ignore those relationships. They just don't invest a ton of time into them. They have earmarked the relationships of people that are truly their friends that they want to deepen and they do a lot of social things with those people. Greg takes people to, Baltimore Orioles games. He takes people gambling to the casino. What a shock that is, right, Craig? Greg Kingsbury definitely likes to wager. He takes people out on boats. Mike Watson and his wife take realtor partners out to dinner a lot. They have identified who are the people that refer business to me that I truly consider to be a friend, and they double down on those relationships. And that's why they get such strong and committed, loyal referrals from those partners, because those partners view them first as a friend. So to your point, it doesn't have to be miserable. It could actually be a lot of fun. Pick the people that you really enjoy working with, that you have a lot in common with, and go deeper with those relationships, which walks us into the next topic that I want to talk with you about. And you have a lot of content in the Loan Atlas on this topic, on the subject matter of networking. And I know that networking is something that you did at an extremely high level in the DC area. Tell us a little bit about your networking strategy and what you think is important for people to understand about the art of networking.
Being invaluable and look, you know what's so awesome about this business, Tim, is that everybody pretty much is a prospect. There's other things you could sell where that's not true, but it's true in this business. Everybody either wants to save money on their mortgage, on their existing mortgage, or wants to buy a home. Pretty much everybody. There are, more and more now, the younger generations are renting everything. I just read about that, but for the most part, everybody either wants to buy a home, or once they do, they want their mortgage to be cheaper. So everybody's a prospect. That's the first thing. So you can network anywhere you want. Network where you're passionate. Network in places you enjoy being. Network at a nonprofit if you want, right? Network at your school, your church. Network as part of being a coach or involved in your community or HOA somewhere. Network at your chamber if you like that, or at your local leadership organizations or boards of trade. Network in any of these places you want. For me, I would network at a lot of those different things. And in order to determine where to network, first go wide, which means try out a lot of different places, and then go deep, meaning get rid of all the places you tried out and just stick with the 2 or 3 that you really like being at. And then once you're there, don't just show up at the cocktail hour, have a few drinks, and run out the door and say, I didn't get any business. That's not what you want to do. Networking is a marathon, not a sprint. So you want to get there and you want to be valuable. And my formula for being valuable was to join at least one committee or other group where I could actually do some work on behalf of the organization, whether it's work on the nonprofit or coaching where I'm actually doing the work, whatever, so that people could see Craig in action. Man, he's good at that. Man, he said he was going to do that and he did. And I would make small promises and then I would report in on the promises that I made in completion. And people started to realize that I had a high say-do ratio. I say I'm going to do it and I do it. That demonstrates competence. Then they would get confident. And then when they needed a mortgage, they would ask me. I've done mortgages for the guys that I play roller hockey with on Sunday mornings for 20 years, right? Guys that have the filthiest mouths you could possibly think of. And, in that environment, I'm doing it all too. And they find out that I can help them with a mortgage. They're all over it, right? And so being on a committee, showing what you can get done, it'll come. Just be patient. In time, people will understand what you do and will ask you for help. So for me, networking was really fun. And I did it in all facets of my life. And I was never, ever overt about, trying to get the business. I was always in a position where I was helping other people. And that's where, to my earlier comments, that's where I spent my time writing my handwritten notes. Nice to meet you. That's where I spent my time writing my LinkedIn recommendations. This person's great. Want to work with them. That's where I spent my time sending books. As I would hear people's challenges in their business, I would send them a book that I thought would help them. So all of those little techniques all were part of my networking strategy.
And I'll underscore your statement earlier, because you said a lot there that was valuable, but it's not a sprint, it's a marathon. So people give up too early. That old Napoleon Hill quote, success lies just beyond the point where everyone else gives up. It's like you need to be investing your time into being there consistently over time. And then a refi boom hits and everybody knows, because you've been there for a year and a half, that that's what you do. And then they're all coming to you and they're all wanting to refi with you, right?
That happened to me in 2003. I joined an organization in 99. I joined the membership committee. I did a lot of work. I became an ambassador of the organization. They constantly, in every meeting, I would talk about the 3 or 4 companies I had met with and introduced myself to and help them get involved with the organization. And people just really got to know me. And in 2003, rates dropped. And at the end of a committee meeting, there was literally a line of people that wanted to talk to me about their refinance. It was a 60 or so person committee. And within a few months, I had refinanced half the committee.
You mentioned roller hockey. Yeah, that's a lot of money. You got paid a good hourly rate of pay when it was all said and done on that, for sure. You mentioned roller hockey. Is it true that you proposed to your wife, Amy, on rollerblades?
I did in Stanley Park in Vancouver. Yep, for those of you that know Stanley Park, and I haven't been back there since, and I would love to get back there. But yeah, the plan was to take a hike and then find a good spot and propose to my wife there. And our plane got delayed. We got stuck at for those of you in Minnesota, at the Thunderbird Motel in the parking lot of the Mall of America, and missed our connection to Vancouver, which was brutal because I had a big old diamond ring in my fanny pack. And then we got to Vancouver and we had a great dinner reservation. I realized I don't have enough time to take a hike and find a great spot to propose. So let's get some rollerblades. And we were rollerblading back then, Amy and I. And all of a sudden I pulled off the path on my rollerblade. She's like, "What are you doing?" I'm like, and then I proposed.
Were you wearing leg warmers?
This was the 90s, not the 80s, wise ass.
All right. So let's talk about leadership. There's just so many topics that you're so well versed in. I consider you to be one of the most versatile teachers that I know. And you're just scratching the surface on so many things, but adding just such a tremendous amount of value in this conversation. And I know that leadership is something that you are incredibly passionate about, and you devoted a lot of time to being a great leader. And you guys won a bunch of awards at Apex for being one of the best places to work. And right now has been a tough time over the last couple of years. And we have a lot of friends, you and I, that are in leadership positions. And I know that you're very tapped into, what they've been going through. So what wisdom do you have to share about how to lead during tough times?
Find out what your people need and give it to them. That is what you do. And the better experience you can give to your people, the better experience you're going to be able to give. They're going to be able to give to your customers. And they'll be, if you have the reserves, and I hope you do, to be able to do it, keeping the right people on the bus right now, keeping them happy, that those funds will come back. The market will change and it'll be more vibrant again at a point in the future, and those funds will come back to you. So now it's about investing. Right, that rainy day fund you put away during the really crazy times. Now's the time to break that out, invest in your people, up-level their training, give them a new skill, cross-train them into other skills if you've lost people, and get them ready for what's to come. And and spend time with them. I mentioned my great friend and my longtime business partner, Eric Gates. We had, 150 people at Apex, not all in the one office, but in our headquarters, we had a lot of them. And every morning, even though he was the busiest guy in the company, the president of the company, running the operations with one of my other partners, Stuart, Eric walked around the entire office every morning. And I know he can't do this now because we don't have that in most workplaces. And he said, "Good morning to everyone." But how can you do that? How can you do that if you're working virtually, if you're in a smaller office? It's really important to let everyone be heard and felt. And one of the most effective things I used to do as CEO, I probably told you this before, is I would look at the org chart. I had an org chart on my desk and a roster of phone numbers, and I would call the most frontline person I could find, a closer, a post closer, a compliance assistant. And I would just call them, say, "Hey, it's Craig." And their heart would drop because they were like, "Uh-oh, what did I do?" Right. And I would just call and say, "How's your day going? What are you dealing with today? What's the challenge you're having?" Right? Why do leaders only talk to some subordinates that are not one below them, maybe two or more below them? Why do they only talk to those people when there's a problem or in groups? Talk to them one-on-one. Years ago, I did a tour of the BMW factory in South Carolina. We took our team to the driving school down there, which was super fun and great for talking about the perfect loan process. But there was a huge banner in the factory, and it said, "Catch someone doing something right today." And in business, we tend to just catch people doing things wrong. And that's when we talk to them. So catch people in your organization and on your team, catch them doing something right. And don't just call it out to them, call it out to everybody. Call it out to everybody, because everybody on the team, hopefully, is valuable and is contributing. And the more they feel that from you in a genuine way, and the more you mean it, and I meant it, the better everybody is going to do together, and the more fun it's going to be in the workplace. It can be fun.
That's a beautiful answer. I also am aware of a couple of things that you did during COVID that I'd like you to share that embody giving people what they need to show that you care. You want to share those with us?
Yeah. During COVID, it was insane, and everybody was working remote, and the kids were home screaming, and people were just really busy. And it was impossible to hire because everybody was so busy, and we needed more loans processed every day. We needed more loans underwritten every day. We needed more loans closed every day, and we couldn't hire anybody to do it. And it was, too much of a ramp up to outsource. So we went to our people and we just said, I actually did this in partnership with my amazing chief experience officer, Steve Dorfman. We went to our folks and said, what do you need? What is preventing you from processing more loan files? And they said, well, kids are home, they're screaming, they're in online school, I got to help them with their homework, I got to get dinner ready, the house is a mess. We said, okay, we got it, time out. And we did 3 things, which would not be applicable in today's market, but hopefully the lesson will be give people what they need. So figure out what it is they need now. We did 3 things. 1, we said, okay, anybody that wants their house cleaned once a week, we made negotiated deals with 3 cleaning services in the area that cover the whole area where our employees were. We will pay once a week to have your house completely clean, top to bottom, the whole thing, right? Everything except laundry, so to speak. And this will give you the freedom to, when you are not working, ideally on Saturday or Sunday, this will give you time with your family, which you really need to reset for Monday, so that you're not spending your entire weekends and free time cleaning up the house. Okay. That was the first thing. Very well received. The second thing we asked people was what was taking them off their highway during the day. And they said preparing dinner or ordering groceries or having to run out to the grocery store during COVID, which was really not easy, as you recall. So we said, okay, no problem. We will pay for a week's worth of groceries for all of our people once a week. These 3 stores, here's the deal, whatever. And we had a dollar limit, but this was huge, right? And some people didn't want that. They chose meal prep services. So we had, I forget how many days it was, but we would have meal prep services or pre-delivered meals sent to the house as well on certain days, so that you didn't have to worry about dinner and cooking. And that solved a lot. But the real breakthrough came when people were talking about online school and how their kids weren't doing as well and they were not really paying attention, all that. And we didn't really know how to solve for that. So we came up with something. What we did was we determined that we would help with online tutors for the kids, and we would pay for that so that they could help with the homework after the school day was over. When the kids would normally have been after school activities and other stuff, they could have online tutors helping them, which would then help the parents process, underwrite, close more loans and all that stuff. And to really put a big bow on that, what we did was we queried our database of past clients. We had thousands of them. And we pulled out the field in Encompass that was teachers. And we sent a blast email to anyone who got their mortgage from Apex Home Loans who was a teacher, and asked them if they wanted to make some extra money tutoring the students of our employees. And we got an overwhelming response. And it was the most win-win-win thing I think I've ever done. And grades went up, productivity went up, happiness went up. It was incredible.
So beautiful, man. It makes me emotional just to think about what it must have felt like to be an employee of yours during that time, how crazy it was. And, it kind of brings me to something that I'm passionate about, which is the subject matter of loyalty. People throw the term around and use it in a way where it's like, my realtors aren't loyal, my borrowers aren't loyal, my staff isn't loyal. Loyalty is not a gift. It's something that you earn, and you earn it by showing that you care, and doing something selflessly for someone else is what evokes loyalty. And when it comes to the subject matter of, I was doing the quick math when you were reciting this stuff. I mean, we're talking about $1,500 a month approximately that you were spending on each of these employees. That's a lot of money when you have a lot of employees, but you're also making a ton of money. And I would argue that you probably got, I mean, how much you make per loan? More than $1,500 probably. So it's like,
$5,000.
yeah. So I'd imagine that with every single person you did that for, you got one extra funding minimum out of that loyalty that was created, and the freedom that you created for them to be head down and to not be in a victim mentality because they're working too hard and they're having to go clean their house and make their own meals and all that kind of stuff. I mean, everybody won in that formula. So I'm really glad.
Recruited, right? Because all the recruiters were calling.
Yeah. Yeah. It's real tough to leave somebody that shows that you care about them.
It was great.
Or that they care about you. Yeah.
It was great. And people loved it. And when we took it away, after things slow down, like we thought, oh my God, because you can't give anything and not take it away. It's very hard to do that. Not a problem at all. We're so happy you kept this for as long as you did. No problem. Thank you so much. Whatever. It was very rewarding.
Let's transition a little bit personal here to wrap this up. So one of the things that I'm super happy about is I've seen you as a friend over the last, you were just in Colorado visiting, our buddy Doug Sullivan, and you've been traveling around. I think, I don't know if you went to Utah, you're going to go see Josh in Utah soon, as I recall. You've been getting out there more and moving around and connecting with friends and doing some traveling. And I'm wondering, what's in your mind is the balance, if you will, between waiting until you're later on in life to really enjoy life versus trying to make sure that you create that balance and that equilibrium throughout your life?
Yeah. I just read our friend Chip Conley's book, Tim, about embracing midlife and dying with zero and other things. And I don't want to wait. And I don't think you have to wait. Like, I think it's important. Our friend Jesse Itzler talks about having your Masogi every year, some big giant thing you're going to do each year. I really believe in that. I got Jesse's big ass calendar somewhere around here where I wrote out my whole year and all the trips I'm going to take and all that. And then I just fill in the work part. We talk about rocks and sand all the time. I think it's so important to do the rocks, and then the sand will just fill in itself. The work will get done. But I've been taking some time and traveling and visiting with friends and going to places I haven't been and doing things that I always wanted to do. I think you saw my pictures. I just spent 2 days in the middle of nowhere off-roading with my Jeep and figuring out that you could drive up a rocky mountain with a stock Jeep. It was so much fun, and just stuff like that if you just make the time for it, it happens. I think about coaching. I was coaching hockey 4 nights a week at one point, 4 days a week at one point. And this was in the busiest mortgage times I had. But you know what? You want something done, give it to a busy person. So my point is, don't hold off on those things that you want to do, waiting for some future date. Just put them on the calendar, write them in there, and you'll figure out how to get the other stuff done around it.
Jay Voorhees does this. I used to do it. I think he got it from me, but who knows? When I was an originator, I had a really strong commitment to take 8 weeks of vacation a year and to really be off the grid. Like, I had my team set up in such a way to where I was pretty independent. Like I could check out and nothing would stop running because I had such an amazing team and great systems. And the thing that I figured out was that if I booked all of my trips for the entire year and paid for all of them at that time, like, so in January, February, I'm like looking all the way out to like November, December, and I've got everything booked. Like, you could have asked me at any given 12-month period of time, hey, what vacations do you have planned? And I could recite 3 or 4. And it wasn't that they were planned in my mind. They were booked. They were paid for. Hotels were already booked. And the beauty of that was that it was like a forced mechanism of saying, okay, I mean, I'm not going to get a refund. The airline's not going to send me my money back. Like, that's locked and loaded. Now I need to figure out how to work in around it. And I still do it to this day. I mean, as you know, I was just in Costa Rica for 7 weeks. Now, I did work down there for periods of time during my time down there. But I think that that's a very effective strategy, is to prioritize fun and newness, as Jesse puts it. And, the things that are near and dear to you, to not only prioritize them, but to book them. Like, make that unwavering commitment to solidify that date with yourself and with your family, and then work your work around it.
Yeah, and I think it applies to daily life as well. Getting the stuff and you need. I mean, you know that I hike with my dogs almost every single morning, and like it just sets up like that's something that I want to do. It's important to me to do it, and I work it in as frequently as I can, and it sets me up for a positive day, being in nature with the dogs and walking. And so I think that applies. You know, I'm hearing a lot of originators say now, like just working so hard and they don't have time for this and that. If you make the time, the work will still happen, is my takeaway.
Yeah, you're almost forced to figure out how to set the systems up and to structure the team in such a way to where you will do well even with you not being there. I mean, it's almost like if you don't do it that way, then you're always going to have that excuse. So I just can't. But what if you put yourself in the position where you have to figure out a new structure? Anything else? Go ahead.
It's the difference between having a business and having a job. That's what we're talking about here, right? A job is one you have to be there. A business is a series of people doing jobs that you're benefiting from because you've set it up, right? That's what you want. And you don't have to own your own business or mortgage company to make that happen. You can do it with your own individual mortgage team, and you can do it with your systems. So it's all easily done, not easily done. It's actually hard to do, which is why those that do it benefit the most.
Very well articulated. Bro, thank you so much for this time. This thing is just packed full of great value. I am absolutely certain that anybody that listens to this conversation in its entirety, their mind is fully expanded and blown right now and have a lot to think about and to implement. Really, really grateful to be on the same team as you. Love what we're doing with the Loan Atlas to help people. And thanks so much for being on the show again.
Thanks, Tim. Thanks for making me be the first repeater.
You're the second. I had Josh on a second time already. All right. Sorry, man.
That's all right. Yeah. Hype first.
Yeah. Okay, buddy. Thanks a lot, man.
Thank you.
And bye-bye, everyone. Thank you for listening in.